China has temporarily banned helium exports with immediate effect, citing its foreign trade law. While the chemical is often associated with party balloons, it is an essential industrial input for semiconductor manufacturing. Chip makers use helium to cool silicon wafers during production, support lithography, plasma etching, atomic layer deposition, and leak testing. The semiconductor industry accounts for nearly a quarter of global helium consumption. The move comes after disruptions to supplies from Qatar, which produces around one-third of the world's helium and has already seen exports affected by regional conflict. China's decision is aimed at protecting domestic supplies rather than disrupting global markets. The country imports nearly 85% of its helium requirements, with Qatar supplying more than half of those imports in recent years. As supply risks rise, Beijing is preventing domestic companies from exporting surplus helium. Analysts say the direct impact on global helium availability may be limited because few countries now rely on Chinese helium exports. However, the ban adds to concerns over an already tight market and follows a series of Chinese export restrictions on strategic materials such as gallium, germanium, and rare earth elements. For India, the country is entirely dependent on imported helium, with demand estimated at around 3.4 million cubic meters in 2025. More than half of India's helium imports come from Qatar, while domestic inventories typically cover only 7 to 10 days of demand. Commercial production within India remains years away due to low helium concentrations in domestic natural gas fields. Now, if supply disruptions continue, the industry could see longer semiconductor production cycles, higher input costs, and delays in deliveries of electronics, automobiles, and AI hardware in the coming months.